Let's bring in somebody else who's quite familiar with the space. We've got Anand Srinivasan, Bloomberg Intelligence Analyst. Anand, let's just start with what your breakdown was of the numbers. What stood out to you?
I think what stood out to me was the steep weakness in the cloud data center business. Our numbers were above the street. We had expected PC strength. We had expected corporate IT server strength. We hadn't quite expected this strong of a margin impact. But, all that said, and we expect, servers to do well in the second half of the year, both on the corporate side as well as on the cloud side. And that's going to position Intel well, given that they still have the market share dominance, although that dominance is becoming less and less as AMD takes share. But if you step back from the numbers and you ask the 10,000-foot question is, what does Intel want to be? And does it want to be an IDM? Does it want to be a foundry? Does it want to be a mix of both? The foundry business inherently is a lower margin business than the chip design business, right? So if you're going to get into that business in a big way, your margins are going to be compressed structurally. So that's point number one. Point number two is that you haven't been able to write your own house in terms of manufacturing technology challenges. Suddenly you expect all this outpouring of customers support for a business that is lagging TSMC and Samsung. And that's questionable, right? So, we have a sort of a bifurcated series of questions on Intel. Number one is, are you going to be able to be competitive with AMD and NVIDIA over the next 3 to 5 years? And what does that look like? What capabilities do you have? What capabilities do you need to acquire, right? From the design perspective. Second, will you be able to manufacture or keep up with the advanced manufacturing of TSMC so that you can compete with AMD and NVIDIA? If you can't, then that raises questions on the foundry strategy as well. And then the third set is on the financial profile of the business. Every business, Intel struck gold with the data center business, and the cloud took off, and they've been able to satisfy that end market really well. And revenues grew. That's the best gross margin business. And suddenly AMD has a competitive product in that space. So, how are you going to defend that turf? Any other business that Intel thinks of getting into, autos, networking, storage, adjacent stuff in the data center, they all carry substantially lower gross margins than in Intel CPUs for servers. So what does Intel want to be in the next iteration? I think those questions are pretty pressing.
I think they're pretty pressing. I think investors might be getting a little bit less patient, trying to give Pat Gelsinger some time there to answer those as he's, still kind of relatively new. Stock's only up 6% though year to date. I mean, if you think about that pressure and where they go from here, the Global Foundries deal, as reported by the Wall Street Journal, was interesting just to kind of see that being maybe one of his decisions early on to kind of establish where he wants to take the company. But I mean, to your point on maybe margin pressure there and what that could do, I mean, how maybe will that deal, if it goes through, alleviate some of the pressure and trying to find out what direction he wants to take Intel down?
Yeah, that's a very good question, Zach. The Global Foundries deal accelerates or amplifies its Pat Gelsinger's IDM 2.0 strategy, right? They will expand in the foundry business as a result of the Global Foundry acquisition. But if you look at the distribution of capacity of Global Foundries and you combine that with Intel, which we have done, is the advanced node capacity isn't there. Global Foundries walked away from advancing its roadmap into the smaller pitch nodes. So they're not competitive at all with TSMC. In fact, Intel might be a better position relative to Global Foundries in many an instance. So while it amplifies its foundry strategy at lower margins, right? It doesn't really address the central question is how are you going to advance or better your technology roadmap? So that still for us is a head scratcher. The other thing too is from a margin perspective is TSMC's margins are lower than that of Intel's. The best foundry in the business has weaker gross margins than Intel. So why?
I mean, It is true, even as Intel looks for potential acquisition targets. We heard the company say yesterday they are moving very quickly on the foundry business. They noted specifically 100 businesses they're speaking to that could be potential customers. So if consolidation really is the route to dramatically or at least quickly ramp up their foundry business, what are some other targets that make sense for you?
Yeah, I mean, look, from the advanced technology roadmap side of things, TSMC is the only game in town. Maybe Samsung, which is a subscale player in the advanced node foundry, and Intel, by that token, is in the top three, right? So the question then becomes is you have to sort of widen your scope and say what kind of acquisitions make sense. Is it the IDM 2.0, or is it other intellectual property pieces that expand the ice cream sundae flavor potential of Intel? But, wearing my sort of pessimist hat here, Intel's acquired other companies in the past. Altera was a big deal. Mobileye was a big deal. The memory business, the Infineon modem business. But they haven't been able to put together a consolidated die to solve a structural problem for the clouds or for any other market. So what gives them the confidence that they're going to be able to do that in the future? The foundry business is interesting. It allows them to make non-x86 PC and server chips, but they haven't been able to consolidate that intellectual property wide as it is already well. So I'm a little worried about the M&A strategy or the M&A potential, because you have all these different ice cream flavors, but at the end of the day, you got to be able to put it together in a nice little sundae with a cherry on top with all the fixins. So, and they haven't been able to do that. And that is key in this business.
And the shelf life of ice cream, too. You wait too long, it all starts to melt. People start to get even more displeased. That's the other thing about sundaes here, too. So Pat Gelsinger doesn't have all that much time to continue the metaphor, but appreciate you coming on here to chat with us today. Bloomberg Intelligence Analyst Anand Srinivasan, thanks again for the time.